What's going on, guys? I'm going to try to do some SPY TA for you guys here. And it's just something I was just kind of looking at, just kind of like past performance and, basically what we have coming up here on SPY, which is pretty detrimental here, or can be, is a bearish monthly MACD cross. And I was kind of just trying to go back and compare, some relative strength or RSI, points where it peaked, points where it caught bounces, potential bounces, and areas that it, found bounces way down, like in these levels here, 43. And I just kind of wanted to see how everything related. And one thing that we can see just in the past 1, 2, and now potentially 3, but, this isn't even guaranteed or anything yet. Well, actually, nothing is guaranteed, but one thing that I do have mapped out here is this potential uptrend here on a monthly time frame. And it's basically confirmed from this point here, this touch, to this trend line, back to this touch, back to this trend line, so on and so forth. And it bounced in between here a few times. And, eventually it started attempting to close above. And it had a fake breakout here. And then that was when that, big March crash came in. And, after that, we pretty much got so much momentum that we just ripped all the way up. We back tested it, confirmed it right around here, and then we just ripped to the upside. And, since then, we've been pretty much chopping around up in this range. And, one thing is for certain is that this could, if it does get rejected and continue down here, we could come all the way back down to this support line. I know it seems crazy, but if something like that was to occur, this is an area of interest, which is around this 364, 363, depending on how long it took. I mean, if it takes even longer to play out, this is in a monthly time frame, so if this did end up just having a few bounces here, just kind of doing its thing, whatever, 385, anything down in those ranges. And, it could set up for something pretty bullish. If that did even take this amount of time, we could end up having this huge falling wedge that ends up, lifting us off eventually. So that's just something to think about. But I want to get back to this monthly time frame. So, we can see here that the last two tops was up in this area here. And recently we came up into this box here, and it looks like we double topped right here on this monthly time frame, and we've been rejected ever since. Now we're at a pretty key support based off of here. I mean, I can't really call it a support because there wasn't too many times that it did catch support. Just this dip here over in February 1st, 2019. That was when we ended up right here. And what happened was we actually had, was this in the same general area? October 1st. And where was October 1st? October 1st was right here. So roughly right around this point right here was when we had that monthly cross. We were right at this yellow trend line where we're at right now, and we just had this monthly cross. So roughly right now in this monthly time frame, it's at a crazy critical zone, because if we do play out something similar to this point, oh, sorry, not that point, to this point here, which, this was only 1, 2, 3, 4 dreadful months of downtrending, going from roughly 295-ish, 290, down to 231. That was this point right here, which, if we were to measure it out, this was a drop of, actually it's hard to see, those in the way. This was I'm going to just go from the bottom because it would be easier to see. But it was roughly a 26% drop right there off that monthly cross. So it's just something to think about as far as that. I mean, we can't really say that every single drop has been roughly the same because, it's been different. I mean, from this March COVID crash down, it was 122%. Wait. Sorry. No, that's not right. I'm sorry. 35%. Jesus. But 28 to 35% right there. So, that's just something to think about. So if we were to, and I'm not really saying this is the absolute top here, but if we were to drop roughly 24%, we're looking at roughly around this 382. So, I mean, it does coincide with this roughly, depending on when we hit it, 380 to 360 level. But this is all going to be determined whether or not we have this monthly cross, because we've had a point where we rolled and we faked and then we ripped back up and then we crossed. So could we get the same similar price action that we had right here? We had this starting to chop down. We had a fake monthly cross, and then we ripped for another 5 or 6 months, and then we had our big pullback. And, that area before this happened was roughly around This was roughly around 23% right there. So even this small pullback before we had this fake monthly cross, it was a 24%. So with all that being said, it seems like in any large correction after a MACD monthly cross, we end up seeing a potential 24% correction. That's pretty much where I'm getting at right there. I mean, we could measure out each one of these little drops here, but let's see. From this point here down to this point here, this one was only a 15% correction, which it rolled over and then it ripped on a huge move. This was one of the these are some of the largest ones, and some of the larger moves down ended up resulting in, that's like a 56%, from this peak here, roughly about the 48% there. So, those are some big moves down. But I'm going to get into like some smaller time frame stuff. But one of the things that I really there's another 24%, 22% roughly. So, we're averaging about a 22% correction. And each of these corrections here were resulted in a monthly cross. And also the bigger corrections were resulted in breaks of this lower trend line here. So that's just something to keep in mind here. And this is something I'm going to be trying to watch. Obviously, we don't have a monthly close yet, but this is our first kind of brutal monthly close here with a flat top. And we could see what happened after closing a monthly candle with a flat top like that. We did end up on these 24% corrections. So this is we don't quite have a flat top here, actually. You can see we did poke our head a little bit above, but, in order to get completely a nice green candle here, we would have to close our monthly above 458, 459, which has been brutal resistance. So, we can see that even if we were to take our uptrending support on this monthly from this whole entire beautiful green weekly or monthly support, this is our first monthly support below this trend line here that's been holding us up for multiple months. So this was a huge rally here from this low to this high. We're talking about, we'll go from the March, we'll go from that March low to this high here. We're looking at, roughly 120% over the period. This is like a year. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 23. So it's almost been 2 years. This next monthly will hit our second year from this candle here. So almost 2 years from this crash. That's kind of concerning to think about too, just for the fact that it's like exactly 2 years about to be on this next monthly candle from this COVID crash here. But either way, this is something to watch. I don't want to spend any more time on it, but I want you just to think about this on the monthly time frame. So I'm going to remove these drawings because they're going to get in the way most likely. So now let's go down to, and we can even just from this monthly time frame, we can even see what's been a key level of support here from monthly candles only, a key level of support for us has been, I would say, as low as this 434.51. So that's basing it off of these bodies here, right? So since we ripped through, we closed the monthly, we could not close any bodies roughly below. I mean, this isn't even perfect. Let me go right on it. Right on it is, yeah, 434 really. So if we were to close a monthly below 434, that's going to signal a very big drop. And, the problem here is that although we've had these great monthly candles, we haven't built too much support or like a lot of monthly consolidation. I'm sure like we can probably go to a weekly time frame and actually take a look and see. But even on a weekly, I mean, how much support have we actually built in this range? Not too much. So if we look here from this dip here, right, when we lost this and we closed a weekly candle below $333, that was when we had this big drop. And then eventually when we ripped above it, we pretty much just found a nice double bottom, reverse, or a nice double bottom right on this area here. Weekly double bottom. And that sent us on our moonshot. And then, pretty much all of these candles have just been straight up. Dailies are going to show more consolidation. Obviously, wherever you go, you end up having a little more consolidation, but this was our first consolidation area right here, 355. We pretty much trended up here. We had a little tiny bit of consolidation right here. In this zone, roughly at the peak of 400, we had more consolidation in this zone right here, which is roughly, let's see, if we go from this peak right about here at this double top, roughly 423.41, which is pretty much where we wicked down to when we had this big head and shoulders drop here. And, it kind of looks like a head and shoulders here, but I don't really like it. So I'm not really going to call this a left shoulder, this a head, and this a right shoulder here. This was definitely a head and shoulders right here. Right here. Right shoulder, or left shoulder, head, right shoulder, and then our drop. So, we rounded over again after retesting that support here. This was something I was posting a lot about in TradingView, this was where I was really getting concerned, was that if we, I can even just go from some of this, put your roughly support line, something like that. I mean, this is half-assed right now, but, we had this big support right here, pretty much chalking it up to about right here. And what did we end up doing here? We had all this beautiful support here, beautiful support. Every time we touched it, we rallied. We broke it. We came back and we tapped it. 1, 2, double top on it. And now we're pulling back down. So, the best case scenario here for SPY is to come back down to this 423 area. Potentially, doesn't have to come down and make a double bottom. But if it did make that double bottom, then we might be able to, create something that can make us nice and bullish and rip back up and potentially attempt to reclaim the support here and continue bouncing on our uptrend. So this is really a setup that needs to hold. It doesn't have to, like I said, come down here. As of right now, on a daily time frame where we just closed as of today, we can probably go off of these 2 wicks here and pull it across to right here, but that doesn't look too good. But if we did get a bounce here, say this ends up turning into our nice bouncing support line right here, as we do know that 234.12 is going to be a key area. Same with over here. I mean, this is a daily, but we did break it. We ripped down here to 426. We got bought back up. We held under it a little bit, but eventually we blasted through it. We came back to back test it. We didn't close a candle below it, and that set us up for our rally. That eventually led us back down here. Couple, bodies were closing below, but not really full bodies. Bought back up, tried to close. You know what I mean? Guys see it. So, whether or not this ends up being some kind of, trending support line that ends up, if we do get a nice rip back up here, I mean, that would be insane. I honestly don't see that happening, but we can look at some smaller time frames. But if it did happen, it wouldn't be, this could set us up. We really need to rally. But, let's, look at some EMAs and just see, like, what I've been seeing. And what I've been seeing is when we did close we were chopping around right here, right? This was right below the 200 daily EMA, this green one. And if we pull this daily and take a look back in time, when was the last time we were below the 200 EMA? I mean, that was really in this range when we had this COVID crash. We dropped below it. Any of these big drops was when we dropped below it. But this point right here was a key zone because we were attempting to make a nice double bottom, but we were actually being held up right below all the EMAs, and that sent us on our big drop. But for the most part, SPY is not below the daily 200 EMA for very long. So it bounced off the 200 EMA here. We did double bottom here and double bottomed here. It wicked below it a few times here. But look at this trend. It maintains itself above the 200 EMA for a very long time on the daily here. So right now we're at this point where either we're going to end up with a bearish setup like this, where we're getting all this EMA rejection, and we need to get above right here, or this is going to happen right here, and then take off maybe. So right now, this is a holding below, daily candle closing below here, 200 EMA and 20 EMA, 444.50, 100 EMA and 50. The 50 is about to cross the 100 here in the daily. That's not a good sign. 456.10. What happened last time we crossed the 50 over the 100? It was roughly about right here. And, we had the 20 cross the 50. We had a small little relief rally, and then we dumped down quite a bit. But, there's been fake outs here. Like this was a fake out. And then we ended up ultimately heading back down. But that's kind of where we're at there. So this is trying to set something up here. We have to figure out what it is. But we can also see the bearish. Everything that's going down here right now is very bearish looking. I mean, even with this recent support, if we look at it like this could be our bearish, potentially bear flag right here, or rising wedge, and we just got a 4-hour close below it, and that's sitting at roughly 438. And if we were to open up on Tuesday, because it's not Monday, 439 really. So like, it looks like price is probably going to hang out below this area right here for a while, which is roughly 440, 441. And until we can reclaim that, this is not going to be good. And we had a hard time holding this as support this whole time. We trended under it. It was monster resistance. We broke out. We tried to back test it. Rolled back up. We couldn't back test it. Couldn't hold it as support. Inverse head and shoulders, we ripped, but we never really came back to back test it. When we came back to back test it, we lost it completely. So, I mean, it's not a very good support, but it does hold us some decent resistance. But it's not that reliable. What's more reliable is roughly this zone right here at 427, 427. So if we do come down to 427, that's going to be the area we want to hold. If we do wick below it, obviously we have our previous low down at 421. If it does just have a crazy nice wick like it did right here, we just don't want to start closing below and holding this as resistance, because that's when things are going to get ugly, ugly, ugly. So, I mean, I'm getting close to the end of this video here. But you guys see what I'm looking at here. Let's just look at some Ichimoku Cloud just to see what's going on. We had this Ichimoku Cloud on the 4-hour time frame, green majority of this uptrend, and it's starting to flip red, and most of that resistance is starting from 446 up to 450. So as long as this continues to stay red, this isn't going to be good. Let's look at a daily. Have we flipped bearish on the daily? We're just starting to flip bearish on the daily here as well. So, I mean, it's pretty clear that we've been dropping, and it's pretty clear it's getting bearish, but this is definitely going to be pretty rough for a couple months here, and we're coming up on that 2 years since the COVID crash. We're coming up on a monthly close, which is going to potentially push that bearish cross even closer. So, you know, this is just things we're going to have to keep our eyes on, but hopefully this is helpful. We could look for a little bounce here on Tuesday up to like the 440, 439s, but you know, do we have any bullish divergence or anything? We are printing bullish divergence. We